production have been rising and there are low levels of exploration. Production itself is down, there's less being brought ashore, so the cost of extracting each barrel is up 27% to £17. Exploration drilling was down from 44 wells 6 years ago to 15 last year. But it's not all doom and gloom. There is record investment, £13 billion of it in 2014, very near last year's record high. And as 25 new fields come on stream this year, so production is expected to rise again after years of decline. The man behind this report says poor weather is partly to blame for a lack of new drilling.
When we asked our members why they didn't drill as many wells as we had hoped last year, they put rig availability at the top of the list, and they also talked about access to capital. I think we've got to try and work upon both those issues. Of course, you remember that we've had extremely bad weather this year. We are operating offshore in some of the most hostile waters in the globe, and therefore there's been an awful lot of waiting on weather this year, and that's had an impact too as well.
It's estimated there could be 24 billion barrels left, so it could be another 40 years of production. Yesterday, a report recommended a regulator needs to be set up to get the maximum from what's left in the North Sea.
I see being a regulator which is going to be more about facilitating, encouraging, removing blockages, helping make things happen. I don't see this as trying to curb the big bad oil companies. Couldn't be further from the truth. We've got some really good operators in the North Sea. They're very effective, they're very professional, they've got some extremely good people. They're not actually all that good at collaborating, and that's the key role that the regulator will have, with sufficient teeth, just to give it the backup if necessary.
Some operators are already focusing their future investments on countries with better returns. So can we still compete in a global market?
The multinationals have got a choice to make in where they invest their capital to develop assets, and one of the difficulties is getting hold of rigs to do the exploring. So I think the UK's got a lot of things going for it in terms of the skill set here, the infrastructure that we have, although that infrastructure is ageing, but it is a competitive global market.
Today we face a challenge. Levels of CO2 in our atmosphere are rising. Much of this comes from burning fossil fuels.
Yesterday, multi-million-pound funding was announced from the UK government for a planned carbon capture and storage plant at Peterhead. The project would see greenhouse gas emissions captured and transported to the GoldenEye gas field. The First Minister has accused the Westminster government of taking too long to commit to the funding. Politicians are being urged to take heed of today's report.
The oil and gas, offshore oil and gas industry is a massive wealth producer for the UK, and frankly I think it needs a little bit more government time and attention than it's had, and I hope we'll get that.
Whatever the outcome in this year's referendum, the oil and gas industry is sure to be a central plank of the economic case for or against an independent Scotland.
I'm joined now in the studio by Professor Stuart Hazeldine, a carbon capture and storage expert at Edinburgh University, and by David Hunter, an energy analyst at Schneider Electric, whom you may have seen in the film there. And in Aberdeen we have Professor Alex Kemp, an oil economist from Aberdeen University. Well, Alex Kemp, this is complicated stuff. Can you just try to explain to us in simple terms why it is that exploration in the North Sea appears to be falling off so dramatically?
Okay, so that is indeed one of the features of what we're experiencing right now. So over the years, the exploration potential has been quite substantial, but the average size of new discovery has been going down with respect to the maturity of the whole basin. So at the moment, the average size of a new discovery is around 20 million barrels of oil equivalent, whereas in the 1970s, we're talking about over 500 million barrels. So much smaller fields now can be discovered. So the major companies are not all that excited about finding small fields. So a lot of the exploration is being undertaken by smaller oil companies, independents, and they have difficulties in finding finance, which has been mentioned in your report. And so that's one of the reasons why exploration is at a relatively low level. The availability of rigs has been mentioned as well. So hopefully the current downturn in exploration will be temporary, but certainly remedial action needs to be taken.
Right. But if there are these more fundamental problems, I mean, I hear what the oil industry is saying about availability of rigs and problems with finance. If that's the case, this is simply a temporary phenomenon. There's nothing fundamentally about the North Sea or the reserves left in the North Sea which could explain this.
Well, the remaining reserves from the Department of Energy's annual review are currently, under their central estimate, about 22 billion barrels of oil equivalent, which is very substantial compared to, for example, we've got about 41 billion barrels extracted today. So the remaining potential physically is very substantial, but mostly those reserves will be in relatively small reservoirs and the cost per barrel will be relatively high. So it will be challenging to access and economically produce these reserves, and we have the current difficulties of access to finance and availability of drilling rigs.
David, there is a bigger picture here as well, isn't there? I mean, not all this being true, but presumably whether or not reserves in the North Sea are exploited depends as much on availability of new hydrocarbons right around the globe and on oil prices as it does on anything that happens in the North Sea.
Of course, I mean this picture of increasing costs, for example, isn't something that's solely related to Scotland. I mean, from Oman to Canada, you hear people talking about the rapidly rising cost of extracting oil. That's partly because we're looking for it in more expensive places, deep water, tar sands in North America, and also tight oil in the States in particular. So what we're seeing is the cost of extraction rising and also the operational costs going up too.
Is there anything, I mean, is the North Sea on a level playing field with these other areas? Because some of them are like Canadian oil, huge reserves and oil tar, but it's expensive to get out. Or is Scotland, is the North Sea rather, because, if you like, we're getting to the end of its life, or at least more than halfway through, is it going to be at a disadvantage in terms of cost?
I don't think it's necessarily at a disadvantage because it's got the benefit also of being a mature basin and the installed infrastructure, first of all, albeit, as has been pointed out, is ageing and does need maintenance, but that installed infrastructure and skill set so close in Aberdeen is a massive bonus as well. So, but as Alex Kemp said, I think the issue here is that you're going to be talking about smaller discoveries, smaller fields, and smaller companies.
Right. And in that context, Stuart Hazeldean, is Ian Wood talking about beefing up the regulator so he can bang heads together and indeed have possibly legal powers to bang heads together to get companies to explore more? Is that a good idea?
Well, I think that's clearly a very good idea because we've seen at the start of the North Sea really enormous global-sized fields be explored, discovered and developed by single companies, and you can afford to do that with a big single field. But when it gets a little bit more difficult, when you've got smaller amounts of oil, you need to cooperate. There's no point in building two pipelines side by side running 200 kilometres from offshore to both go to St Fergus. You may as well cooperate and share that asset. And in the same way, you may well cooperate in trying to use related platforms to tie into an offshore platform to produce from there. Makes it much, much cheaper for the offshore facilities. And I also think we also have a transition we can choose to take if we want, because one of the things I think we can do is use those same offshore skills and some of those offshore platforms and some of those offshore pipelines to not take oil out of the ground, but to balance that by putting carbon dioxide back into the ground. So we have the benefits of being in a mature oil province.
Okay, we'll come on to talk more specifically about that in a minute. But David Hunter, one of my colleagues was suggesting to me today that actually what Ian Wood was suggesting, although it was done in the most diplomatic way possible and seems to have kept everyone on side, is actually quite radical.
Yeah, I think it is, but it's also a time for radical steps, in that there is this difficulty with exploration and with production in decline quite sharply over the last few years, and I think that the industry, various kind of meetings over the last couple of years in particular, it's been pointed out consistently that the industry needs to get its act together and needs help from government to do so. I mean, you know, a couple of years ago we looked at, I think, the third increase in the supplementary charge from the UK Treasury, which, whatever you feel about the mix between private company profit and...
I'm not going to ask you to explain the supplementary charge. We'll leave that one for another time. Alec, Ken, that point about more help for the industry, Nick Butler, who's an energy expert at the Financial Times, has written a blog this evening saying, look, what none of the politicians really want to talk about here is that if you really want to get production in the North Sea to its potential, what you have to do is have a tax regime which is appropriate to the type of structure of the industry that you described for us a few minutes ago, and not to the old style big oil companies exploiting big oil fields, and that will inevitably mean less oil revenues from the North Sea in order to extend its life.
Well, I think there is some merit in that. I mean, at the moment, our tax structure doesn't particularly help, for example, investment in enhanced oil recovery in the very old fields, which are subject to an 81% tax rate. And for the newer players for exploration, they don't get such good tax reliefs as do existing players. So some enhancement to the tax incentives for new players, which are not in a tax-paying position, could be useful. And some enhancement to the incentives for enhanced oil recovery schemes, and possibly some enhancements for increasing asset integrity. One of the problems at the moment has been that the production efficiency has gone down markedly from about 80% 10 years ago to about 60% now. So there needs to be a substantial increase in investment to enhance the production efficiency, and that could bear fruit substantially in the medium term.
All right. Now, that's slightly related but different subjects you raised. I think your big issue, carbon capture and storage, approval given for Peterhead. How important is that in your view?
Well, that's a really big step forward, because Scotland's been trying to produce a carbon capture and storage project, and so has the UK, since the first offering of Peterhead in 2005. The UK government clearly wasn't ready at that time, even though it would have got a very low-priced project at that time. BP tried again in 2007, the UK still wasn't quite ready. We ran through the whole Longannet process with Scottish Power, and now we're here. And this is a world-leading project. Shell have searched the world for a gas plant close to a super-duper high-integrity storage field.
Isn't the side of that, isn't in global terms, the big one, carbon capture and storage of coal-fired power stations, and that's going to be, the test for that's going to be a drag, isn't it?
Well, we need to do both, because coal is by far the biggest emitter of carbon dioxide as a world fuel, but for the UK we're moving very rapidly towards burning more and more gas, and particularly if the Westminster government gets its wish to produce millions of tonnes of shale gas, we'll be burning that, and that also has to have its carbon.